behalf of the KenGen Staff Retirement Benefit Scheme Board of Trustees, it is my honor to welcome you all to the KenGen Staff Retirement Benefit Scheme 22nd Annual General Meeting for the year ended 31st December 2021. Dear members, I am now pleased to present the 22nd Annual Financial Report of KenGen Staff Retirement Benefit Scheme that covers the financial year ended 31st December 2021. And operating economic environment. In 2021, Kenya witnessed a strong economic recovery with a decline of COVID-19 pandemic infection rates and ease of government restrictions. The World Bank and IMF reports showed an economic growth of 5% and 5.9% respectively. This growth was witnessed in most sectors of the economy. There has also been more confidence in various business sectors, particularly the service and infrastructure sectors. Scheme investments overview. The scheme's investments have been diversified across asset classes, including long and short-term government securities to real estate, among others, to effectively reduce investment risks. Through these investments, the fund values as at 31st December 2021 stood at 8.174 billion, increasing from Kenya shillings 243 million from the previous year. Additionally, the scheme's investments generated a net return of 6.3%, driven by a strong performance across all markets. During the year under review, the sponsor, KenGen, remitted a contribution of Kenya shillings 500 million towards actuarial deficit funding, bringing the amount paid to date to Kenya shillings 1.236 billion. This is part of the funding plan in collaboration with the scheme aimed at ensuring that we achieve full funding by June 2024. By this, we will ensure that we continue to maintain a strong, financially sound scheme for our members and beneficiaries. In accordance with the RBA Act and scheme rules and regulations, the Board of Trustees is duly constituted. The names of the scheme trustees for the reporting period are shown on page 9 of this annual report. The economy in the year 2022, though expected to grow, remains vulnerable to commodity price increase resulting from the impact of the war in Ukraine, below average rainfall, the resurgence of new COVID-19 viruses, increased political activities due to the upcoming elections, and other commodity prices of imports. We, however, remain optimistic as the general outlook remains positive with a projected economy expansion of 4.7%. On our part as a board, we remain committed to exploring viable opportunities for investments in line with our strategic objectives that have considered risk-adjusted market rates to ensure the scheme has a balanced asset mix that will eventually provide sustainable financial returns, targeting the commitment to pay pension benefits for this and the generation after us.
I am privileged to be here today. I represent the fund managers for the DB fund. Our role, as chairman has mentioned, is just to give investment advice to the trustees. They are required by law to hire a licensed fund manager, and the people you have in office are people who are licensed to do that on behalf of the board. And our work is mainly very simple. We do carry out research and analysis on economics in the market you're invested in the property assets you also hold. We execute on behalf of the scheme trustees, and of course we carry out reporting stating out what has been achieved and what we expect to do in the next quarter. So 2021 was a bit strained, and of course much better than 2020. As you've seen the chairman report, the growth in investment income, it was much better compared to 2021. In 2020, again, you're coming through an impact of COVID. 2021, there's a global recovery, easing of COVID-19 restrictions. The markets improved quite significantly, as I'll take you through. Sector performances there, you'll see again a big uplift, especially on the likes of education, which again, as I mentioned, are recovering from the 2020 COVID-19 complications. The biggest complication in the economy right now is inflation. Again, inflation dictates the amount of money people are able to spend. High inflation means people are unable to buy into investment income. You spend all your money on basic needs, food, shelter, clothing, and the like. So when you see high inflation, it's not necessarily good for the economy. And this is what you're going through on the entire global markets, especially the US markets. They're having rates which are as high as in the last, I think, 40 years. For us, our numbers are not too badly off. We have been able to give below 7.5%, which again is still manageable. On the flip side of that, which I'll talk about, is investment matters. We're seeing Central Bank of Kenya trying to control or ease down the inflation, which is very good for the investment instruments you are currently holding, which we'll discuss as we progress. The factors which really upset or caused a bit of strain in 2021, again, is the likes of crude oil prices. On the next slide, you'll see an improvement, sorry, not an improvement, but a rise in prices compared to the year 2020. And you will see that if you jump forward, the graph extends all the way to 2022. And I think you're also seeing it in our day-to-day life as we fuel our motor vehicles and motorcycles. You'll see we have that inflation matter coming through crude oil prices. This is nothing we can do as a country. 30% of our import bill still is mainly crude oil. And again, we'll be able to see as investment managers how to navigate that quite successfully, given what we're able to play with. In the next slide, you see there's a discussion on interest rates. Members, again, it's not all gloom. Once inflation goes up, what happens is the CBK and general economies in the central bankers will try and adjust the long-term yields on bonds. As they try and control inflation, they will try and push up interest rates on government bonds to make sure that people are able to keep money here and they're able to stop doing what we call speculative investment, and which then pushes up more inflation. The offshore markets were performing better than our local markets, and your scheme has an exposure there, which has worked well, especially for the year 2021, and was able to give almost close to about 35% return on the global markets. Nonetheless, we have a restriction on how much you can put there, and we just have the RBA gives us a maximum of 15%. Your IPS gives us a lower exposure, but we are able to execute that in 2021, which was able to give us a substantive lift up on performance. In terms of portfolio allocation, members will not take too long. I think I'm just on the end of the presentation. You'll see the holdings that we've been having on the portfolio. We have a big chunk of it sitting in about property markets, which is on the next slide, which is about 56%. Then we have about close to about 30% on government securities. We have about offshore, again, 1.5%, very minimal, but again, we also try and take opportunistic investments. We have equity markets there, slightly below 10%. Then you have fixed deposits, which is now what is giving us better yield in 2022 because you're investing them at yields of 14% plus. Global markets, again, also a bit of headwinds there compared to the equity markets. They have picked up much better in this particular month. But for the first half, based on what you're seeing, especially the geopolitical issues coming all the way from Ukraine and the bigger globe, a bit of pressure there. But as your fund managers and with the board of trustees and the support we've received, the scheme should still be able to give you a positive return by the time we close a full year, which is December 2022.
Again, I like to emphasize that we, the custodians, do not make investment decisions on behalf of the scheme. However, we ensure that we do what we call transaction processing and settlement. And this is to mean that we settle all instructions that are given to us by your fund managers. So investment instructions, including bonds, T-bills, deposits, or any other investment that the fund manager may see important for this scheme. We ensure that we settle that, and we ensure that we settle that efficiently to avoid errors and any losses to the scheme. We also do what you call safekeeping of all your asset classes. By this, I mean that we ensure that we do reconciliations of your cash, reconciliations of your assets with the relevant depositories, majorly CDSC and CBK, where most of your investments are held. We also do what you call asset servicing. And by this, I mean that we ensure that we collect all incomes that are owed to the scheme, income on investments, including income on the various bonds that the scheme has invested in, income on equities, offshores, interest on deposits, and any other income that this scheme is owed. We also do account opening. So in case your fund managers and trustees feel that it is important to invest, say offshore or outside our Kenyan market, we ensure that we open all accounts. And again, we open that in good time to ensure that we do not have any loss on income or delay in investments. So members, I wish to confirm to you that income earned to this scheme was collected and collected in good time. All your investments were executed as per laid down regulations. All your investments again were executed as per fund manager's instruction. And that is to mean that we did not make our own investments. We invested as guided by your fund manager. And finally, members, I confirm to you that all your investments are safe with us, and we shall continue to ensure that we hold that in safe custody.
Our role as your scheme administrators up to last year was to keep your member records, to compute your benefits, and to issue you with your annual benefit statement. This scheme is quite an old scheme. It was started in 2000, and some changes happened in 2011 when Treasury directed that defined benefit schemes should be closed. So this type of schemes will no longer be there. And what we are doing right now is just holding the assets of those who were in such schemes before. So in 2011, this scheme was closed. And by saying it's closed, it means it was closed to new members. So any new staff who joined KenGen from 2012 joined the DC scheme. So prior to 2012, we did have members in the scheme. The members who were below 45 years were given the option, were required to join the DC scheme. And that's why you can see most of the people here are a bit young. And members who are above 45 years were given the option of either remain in this scheme or join the DC scheme. So this scheme currently has benefits for those who also joined the DC scheme and those who are in the DB scheme. So as a defined benefit scheme, the employer promises you a benefit. So you're promised this benefit and the employer has to fund this benefit they have promised. And this benefit is promised in the following manner. It will be 2% of your pensionable service and your final pensionable salary. So pensionable service looks at the years you've been in the scheme from when you joined to the date you leave. And by saying final pensionable salary, it means we are looking at your final salary as defined in the scheme rules. So we pay out your benefits when certain events occur. Yeah, one of the things is you cannot be paid out your benefit while you're still working for KenGen. But when you leave your KenGen, it does trigger an event, and we then pay your benefit in the following ways. Right, so the first one, we look at leaving service. Leaving service means you either leave through resignation, dismissal, retrenchment. And the law says that you can access a certain portion. Yeah, so you can access 50% of your accrued benefit. How do we compute accrued benefit? We look at your contributions, what you put in, what the employer puts in, versus the actual equivalent of your deferred pension. So let's look at retirement. At retirement, the employer's intention was to give you an income. You are earning an income when you are employed, so the employer's intention is a similar structure in retirement, and that's why you have pension. So the scheme promises you a retirement income in the form of the pension. The pensioners here can attest that they have been receiving that pension. The pension is computed in the formula that I explained earlier. So also at retirement, members have a portion of taking 1/3 of their pension as a lump sum. So we give you that option, but the 2/3 has to be retained in the scheme, and you will be receiving it on a monthly basis until a member's demise. On immigration, that is somebody who is leaving the country with no intention of coming back. So you must provide the documentation. And such documentation includes you have invitation for citizenship. If it's somebody who's marrying a spouse who has a spouse for another country, then you can access your benefits in such a manner. We calculate the accumulated contributions, and this is paid to the member as a lump sum. Now on demise, the following is paid. If a member passes on, there is the group life benefit currently, which is 5 times the annual basic pay. And secondly, there's a pension that is based on the pension contributions that have been coming in. So when the member passes on, the pension is paid to the spouse and the children. When we calculate the pension, the spouse gets 50% and each child gets 12.5% of the total pension that we computed, and it's payable to up to 4 children. So your family is taken care of when you're not around.
We have audited the accompanying financial statements of KenGen Staff Retirement Benefits Scheme set out on pages 37 to 64, which comprise the statement of net assets available for benefits at 31st December 2021, and the statements of changes in net assets available for benefits and cash flows for the year then entered, and the notes to the financial statements, which include a summary of significant accounting policies. In our opinion, the financial statements give a true and fair view of the financial position of the scheme at 31st December 2021 and of its financial performance and cash flows for the year then ended, in accordance with international financial reporting standards and the requirements of the Retirement Benefits Act.
During the year, the meetings held for the full board and committees were as follows. Full board, we held 4 meetings. The Administration and Communication Committee held 11 meetings. The Audit and Risk Management Committee held 7 meetings. And the Investment and Strategy Committee held 11 meetings. The trustees' remuneration is as disclosed in the financial report, page 60. Currently, the scheme pays sitting allowance of Kenya shillings 28,000 to the board chairman and Kenya shillings 24,500 to board members, all net of taxes. Due to the prevailing bearish economic conditions, the board does not envisage an upward review of members' remuneration. I would also like to confirm that there were no changes in the benefit structure and contribution rate in the year under review.
KenGen's key priority amidst all this remains clear: to generate electricity for the nation, and indeed, we continue to be a market leader in meeting the national power demand for the product we generate. Our strategy remains robust to generate renewable energy. As we maintain our ability to meet our mandate, we have done so through securing financial stability and ensuring we attract capital for future projects. Our long-term revenue streams are secure through sustainable power purchase agreements for the traditional electricity generation business and an aggressive diversification agenda encompassing growing our African geothermal footprint and developing other non-generation revenue streams. Our financial health as a company is critical to the survival of our affiliates, such as the retirement benefit schemes. It is through this that the company was able to pay Kenya shillings 552 million, largely apportioned to the deficit funding to the DB scheme, and 784.9 million shillings to the DC scheme, which is a total of about 1.3 billion during the year. The company remains committed to continuing to make timely payments of both employer and member contributions and funding the deficit as provided within the retirement benefits regulatory framework. We note the schemes continue to be an avenue for the financial freedom for our staff who exit active service to retirement. To this end, 72 and 68 members were paid their benefits from DB and DC schemes, respectively. That is 72 in DB and 68 in DC. We believe this goes a long way in ensuring they and all of us eventually retire comfortably. We take cognizance and applaud the board for receiving various awards during the year, which confirm their zeal for a better tomorrow for scheme members. I urge the trustees to take the scheme's investment strategies a notch higher and play a part in promoting ESG through the investment selection.
I was employed with Kenya East African Power and Lighting the year 1980. Thereafter, in 1989 or 98, we were separated. That's why I appeared to be in KenGen. Kulikuwa na hiyo DC na DP. Some of us happened to get their dues from the DC, the leftovers when they cross over to KenGen. But up to now, some of us have not gotten, simply because when we read over the newspapers that there were some names that appeared, but some of us, like for my case, I'm speaking for myself, I never got anything. So I had to seek the indulgence of Mr. Robert as to what is happening. The other question is that poll questions, DC scheme, question number 1, about our beneficiaries. I kindly request this company of ours, kindly we can walk along with our pass, simply because we have our spouse that we need that we come along with them in the next meeting, if at all it can be applicable. It's just a matter of one day, so that they can be taken through. In the event of I kicking the bucket, they know what they'll be required to get. The other question is about, what do you think will be your major financial obligation during your retirements? Mine is about loans. If I kindly would get some loans out of you people, so that it can benefit us as we enjoy our retirement packages. Finally, about what is the reason why you do not contribute to AVC? Simply because we have not been taken through. If at all we would have been taken through all these sessions, I would have known what to do in the next meeting or whatever might be required. Others, thank you.
How does this translate to money in the pocket of the member? 8.2 billion shillings. I think this is in terms of the assets, but how does it translate to money in the pockets of a member of the DB? And then number 2, you mentioned that we had something to do with 72 members who actually, I think by last year, went into retirement from the DB. If that is correct, what have they actually benefited? In what terms have they benefited from the proceeds of this 8.2 billion Kenya shillings? Just for clarification. Thank you.
The question on the beneficiaries and the request for the pensioners or the retirees to be accompanied by their spouse is an issue that was raised as we were preparing the meeting. Good to note that there's an annual general meeting for members, and we allow you to come with your spouses during the pensioner educations, which we hold annually. But for the one for the spouse is something that the board can need to consider. But for the one for pensioner education, we have always allowed you to come with your spouse, where all this information in more detailed will be shared. You talk about the major financial obligation is a loan. Unfortunately, the retirement benefits cannot be given out as a loan. It's against the law, and we would not have a capacity as for you as a retiree to get a loan from the retirement scheme. So that one is not possible at the moment. For AVC, I hear you clearly. We need more education for the active members. because unless you are taught about it, you are told about it, you might not be able even to know that it exists. 8.2 billion. This is benefits that has accrued for both retired members, active members, and even dormant members. So these benefits are computed as per personal, per individuals. That is on your basic salary and part of the pensionable service and an actuarial factor. So they are very specific to various individuals, but part of this 8.2 billion is to pay pensioners who are retired. Currently, our monthly payroll for pensioners is 42 million. So that is for the already people who are retired. So you can imagine per annum by the end of this year, we'll be paying more than 400 million for the people already retired. Additional to that, this benefit is supposed to take care of active members and also take care of their beneficiaries. For the 72, how did they benefit from this? They were paid, some of them were paid upon taking this option, 1/3 of their accrued benefits as a lump sum, and they continue receiving a monthly income. So they are part of people who are on our payroll. So we pay them monthly. So they have a payroll, they have a monthly payment to their pay slip every month, and they were able to access 1/3 of their accrued benefits as a lump sum. So this benefits was able to be paid to them for those who have already retired. One of the member online, I think the invitation of the spouse to the meeting should be optional. And the member says in easy language, kuona wakijua how much they are worthy can quickly apply the vanishing magic. So the member think that it should be optional to invite a spouse to the meeting. The next one is from Frederick Opondo about the regulations on mortgage for mortgage loans. I wish to confirm that we have amended our trust deed on this to allow members to access this. However, we continue encouraging members to note that these funds that they save is for retirement, and the sponsor have a very good mortgage plan that should always be the first option. The next question will be answered by Nikki Dondeka. The question is, what are the silent futures of offshore investment? What are the silent future of offshore investment?
Members, you have to remember, this is a DB fund, which as the chairman has explained, there's a bit of risk containment in defined benefit. The offshore investment last year was because of the opportunistic nature of what has been happening in the globe, and that portion has made us quite a bit of money, especially last year. But going forward, offshore is almost what you say, almost the same as equity markets. It oscillates high and low, quite frequent. So we have a restriction not to go above 15% and a bit low on the IPS. So going forward, I don't expect us to increase that proportion, mainly because of also the nature of the fund, which is a defined benefit, which is a closed scheme, which means we are generally winding down that scheme. So the level of risk we can take is also a bit calculated. So based on the dynamics of the scheme, we may not want to increase that exposure to riskier assets. But nonetheless, we will jump in and jump out when there's a short opportunity. So if come next year, don't be surprised to find that element is even either disappeared, gone to zero, you brought back all the money here, or it remains at the same place.
Yeah, my name is Washington Wanyang, a retiree. Well, mine is still about the Provident Fund. I was a member of the Provident Fund. And when I retired, I was told there was no records that I was a member of a Provident Fund. So I was required that I provide evidence that was supposed to be a payslip to show that I was contributing to that fund. So I tried checking my colleagues in Kenya Power whether I could get anything to show. There wasn't anything that could show. So I was promised that the matter would be followed, but then the consequent follow-up on the same has always been, we are following up. So I don't have any reassurance that my whatever provident fund is still available and I'll be likely to get it.
Thank you, Chair. The question from Lemod, active member. You're no longer required to go to Kenya Power for provident benefits. You'll be paid from the Secretariat. Your benefits were already transferred to KenGen, so you don't require to go to Kenya Power for your benefits, and you'll be paid in a lump sum.
Now, the issue about the payslip, I think you need to come back to the trust team, and that needs to be looked at on a more detailed basis, because that is a personal issue where your payslip you cannot find your payslip, and we need to get evidence that you've been, whether you are eligible for the Provident Fund or not. On the issue of pension increase, it is true that the scheme is making returns, and we reported that we made a return of 6.5% in the year. Now, if you look at our actuarial requirement, we actually supposed to make a return of 10% every year, not 6.5, because as a DB, your benefit is defined. It is calculated, and the company has to make sure it can meet that obligation.
Deficit inamaanisha hivi. Kuna kitu inaitwa asset. Asset ni zile pesa zenu mmecontribute, zile investments tumefanya, zile property tuko nazo, zile pesa tumeweka kwa stock exchange. Hiyo ni vis-a-vis na kitu inaitwa liability. Liability ni ya kwamba nyinyi tukiamua saa hizi kufunga hii pension scheme, inamaanisha kwamba we shall have to pay you off. And if you have to pay you off, zile assets tuko nazo should be able to pay you, and if possible atakuwa na surplus. So what we are saying now, zile pesa zenu tuko nazo, tukiamua sasa pension ifungwe leo, haitakuwa possible tuwalipe wote. Na imesababishwa na mambo mingi, mambo ya maybe stock exchange investment, vile inafika mahali inakuwa sasa zile pesa assets tuko nazo iko chini ya zile liabilities, ndio inaitwa deficit. Kulingana na RBA na sheria, tunafaa kwa 100% funded DB scheme. 100% ni kumaanisha kwamba zile pesa tuko nazo, na nyinyi pia mkiamua sasa tunataka to pay you guys off, lazima match tuwe na hiyo pesa tayari. Kwa saa hizi DB scheme, na ndio sababu tulitoka DB scheme tukaenda DC, wakati wowote tuko chini, hatuwezi commit hizo obligation, ni jukumu la employer. In this case, KenGen now ndio inahakikisha kwamba hiyo deficit inamalizwa. And that is why kila mwezi tajiri analipa pesa kuhakikisha kwamba hii deficit tunamaliza, tuwe sasa fully funded, na ikiwezekana hata tuwe na surplus 110-120%.
I now beg to move that the chairman's annual general meeting report, proposals, memoranda, recommendations, and presentation made by various stakeholders be adopted and form part of this meeting. May I have a proposer, please? Okay, I have a proposer here. May I please have your names, madam?
My name is Faith Mureithi, and I propose.
Thank you. May I please have a seconder? Thank you. Your names, please, for the record.
My name's Job Miega. I'm seconding.
Thank you, Job. Ladies and gentlemen, as we come to the end of this AGM, I take this opportunity to convey my deep appreciation to you, our members, for always honoring our invite to the AGM, our service providers for your constant support to ensuring that our members receive only the best in their retirement, the ever-dedicated Secretariat team, and the team here at Western Region for their wonderful hospitality.